Great to see you, Ken. What gives here, and what is the decline in the shares telling us?
Hi, Kelly. Yeah, well, I wouldn't read that much into the decline of the shares. I think, maybe there are some event people in there that were hoping for a better outcome, and now, now that it's settled, they're out. But yeah, Bob Jordan. This is how it's supposed to work. Elliott got. They weren't going to do any better than this in the proxy fight. This board was not going to terminate Bob Jordan. So this. We now have a board that's going to have 8 new directors on it from last year, and they're going to do their job and hold management accountable, oversee them. And the number one job for a board is to fire or hire a CEO. And I think over the next year, that's what they're going to be doing. So as you said, I think Bob Jordan could take a deep breath. But I would probably hold off on putting in any large order for new business cards at this point.
Why is that? And what would I don't want to use the word advice, but your advice be to investors or potential investors in the shares?
I think this is a great time to invest in the shares. You have Elliott still a big owner. They've pointed out to the board the poor performance of the company and what they think has to be done. They got one of their people as the chairman of the finance committee on the board, which is basically the operational review committee. And this is going to be a company that I believe is going to be run better over the next year or two. And if it's with Bob Jordan, that'd be great. Everyone would be happy to see him create shareholder value. But if he can't, I think the board is going to do their job and find somebody who can.
How would you describe, Ken, the pace of activist activity overall these days? For instance, there are some anomalies in this bull market. The IPO window has been very quiet. How would you describe the activist front? Should we expect more activity to ramp up? And if so, where?
Yeah, the activism is as robust as it's been in many years. We're starting to see some type of a rotation from growth to value, and activists are value investors, and they're offering a very good opportunities. The universal proxy card that was the SEC implemented a year and a half ago has also been very good for activists, making a lot more settlements, giving activists a lot better ability to get board seats. And it's basically anywhere, any company where they see something that's undervalued, where they think they can be the catalyst to create value, an activist will show up.
We just showed shares of Pfizer. We heard Jeff Smith speaking about this at your event earlier in the week. He made the case that their science is not where it needs to be.
Yeah, he made a great case at our conference. Listen, he also started off by saying, rightfully so, that Dr. Bourla, deserves a lot of credit for getting the country and the world, in fact, through the COVID pandemic. They came up with the vaccine. And I remember back in 2020 when we were masked and we were doing social distance, where we said, whoever can create a vaccine is going to be a gazillionaire.
Right. And
they did it. And they got $40 billion of excess cash flow from this vaccine. But that $40 billion is now gone on acquisitions. And there's really no shareholder value to show for it at a time when the markets have been up and pharma stocks have been up.
Right. So they're looking at Pfizer. They're looking potentially at Kenvue as well, and Skin and Beauty. Any final companies you'd be watching, Ken?
Jana just filed an interesting filing, or they just had an interesting campaign at Lamb and Weston, which is another company that hasn't been doing well, that might need some management change. Those were the ones that I think are on the top of my list.
All right. Ken Squire, we appreciate your time. For now, thanks.
Thank you,
from 13D Monitor.